Hey, good evening, Ken at Tortoise Capital, nightly strategy podcast for Sunday night, September 4th, 2022. This is the weekend swing trade edition. We're going to start off with a couple from Constantine on the weekend Forex. He pulls in on the euro. Nice breakout from sideways quiet channel. 1.6, a COTA 2 continuation for 4, and then on the PSAR flip and collapsing dragon 10 for what's that, 16, 15.6. He's using a nice idea here of a multiple time frames, the 3s, the 5s, the 15s, and the 30s, so that he can identify those higher term resistance levels like this one. When that starts to roll over, he's aware that that's what it did last time. It did exactly the same thing this time, only quick, fast, and in a hurry. So that's a pretty good 15-hour day. Then with the NAS, he's able to bring in an additional 4. Again, using the same idea of that resistance level on the long term, gives him a symmetrical move for another 4 hours. So that's, what's that, 20-yard day? You can make a living on that. Well done. Target selection and framing your trades on multiple times. All right, we'll go through the series now with from Ken H. Here's Devon Energy. This is one of his standard traders right here. I want you to notice he's got the on the daily he's got a COTA 2 that's scratched. Then on this reversal, he's able to play a supported spring crossing on the 65s. You can see that's just barely off the bottom there on the daily, so that's could fill you with a little bit of trepidation. But he nails that on the hourly. Gets a, now this would have been a COTA 2 right here because of the higher low. He waits for the emerging dragon. He gets that. Gets another one, and then gets paid large on the 2 positions. This is about a scratch. And now it sets up a nice, on the daily, a nice critical state. Back to the 10-day high. We're back to the 10-day low. Take your pick. It's right at the fit. That's sort of like a what we would call a fence sitter, sitting right in the middle of that 5 and 10-day range. There's your 10-day high and 10-day low. So a nice tight compression on either side. So this is like a bundle of energy ready to burst in either direction. So you don't want a directional bias on this one. You want to let price take the lead and let momentum build and make sure that you're following it without bias. CEIX, Console Energy Materials, a coal company. The pullback is nice into here. So there's your weekly frame between about 68 and 78. Yeah, and you can see that here, 68 to 78. And this is another fence sitter. He's going to wait for this to break down below 70 to make that trade. But he's ready to play the breakout quick on that one. On the hourly chart, you could actually get short at 72, and which would be getting short here instead of waiting for 70. So I think you could actually get a second position here. So if you got one short from here, a second position, and even I would think about a third position here. Because if this price breaks, it's now back into this, and then the midpoint's around 62, so you would expect that to fall that far. The upside's pretty clear too. It's had three nice buying surges to take it almost to 80, and that's +7 on the upside on about $1 risk. So that's a good looking trade in the energy sector. EQNR, Equinor, energy sector, integrated oil and gas. The entire energy sector obviously been doing well. This burst, this is an interesting one. You know, you see this tight cluster between 37 and 38.50. This time it had a big collapse. This time it had a big collapse. This time fake big gains, and then it collapsed all the way back. So it's sitting right in this crucial boundary between support and resistance. So you really are going to get rewarded for the breakout, whichever direction it goes. He's got this framed out at like 39 and 38 on the daily, which I think feels about right. So waiting for 38 to break, then you could expect 37, 36, 34 and a half, and then the breakout to the upside, he's playing at about 39 right there, and then that will have cleared all of this resistance, so that should be free and clear to fill in that gap. So good looking chart. AES Utilities. The interesting thing that jumps out here, of course, is the strong resistance, this lid on things at 26.15, and the increasingly large sell-offs, all of which, when they recover, gets it back to 26.15, and it keeps a lid on it. So, in my view, playing short from here has every reason to believe it could get to here and then here. It would be surprising if it got above that, just because the only time it did, it only got to 28.50, and then big collapse. So, you know, that's usually not an area you would expect to see a lot of short-term and swing opportunities, but the frame is there. That's an exaggerated move. Profit preservation would not be surprising, and that would get it back around 24. And I think that would be easier for me to take than a breakout in utilities, to be honest. The Qs, one of Ken's standard traders. He's got two positions short that covered, then the re-entry short on the collapsing dragon, second position, and now he's ready to add a third position to the downside. I would also be ready to cash that one around that key price level of 300. I wouldn't give it much more room than that, but I like that one. I mean, you have to respect the lower highs, and that this is ready to collapse. If it gets below 280, though, watch out below. NVIDIA in the chip space. Boy, this has just been assassinated from 340 to 136. Wow. That's like minus 65%. How do you squander that in a market that loves chips? I don't get it. Big gap down, earnings failure, then sell off, and now it's in a critical state just over the last day, right here in the middle like a fence sitter. And if it stays below 150, there's a lot more to the downside on this thing. Like it can get to 120 on the basis of the weekly support level. On the other hand, we do have sort of a Kata 2 starting to form. And if it can get above 144, let's say, then it should be able to close that gap pretty well. And then you get the price ladder. What I'm looking for is every one of these resistance levels. That's part of that value price ladder. So that's going to be in play next week for sure. Costco. Ken H notices the Head and Shoulders, so this failure could easily get it back to 440. Here was your collapsing dragon on the daily. The downward move is not surprising. If it breaks below 510, then these price levels are all in play. Yeah, it's left 522 behind. So you can reward failure with instant short. And then this one offers a tactical move up to 534. That can happen fast. That was 1 day. So you could get a 1 day pop on this. That's nice. But if it does do that, I'd be watching, can it hold above this support level and stay above? Because you want to see it pop, pull, and hold. So you want it to stay above this support level. And that's like a Head and Shoulders in the reverse direction. So to me, 530 looks like an important price. The gold miner juniors just getting slaughtered on the weekly. All of this resistance has been left behind. It's in free fall. So if it breaks below 29, that's new territory and it can be shorted. And this is a nice way to start front running that move, like 29.26. And then if it breaks here and breaks here, look out below. So I'd be thinking about a second position and a third position right there. But conversely to the upside, this little breakout at second position at 30, and then it gets to 30.75. So this is this little bit of a rebound has created an opportunity for some bottoming price action. So getting to 35 from here would not be unusual. U.S. Steel, one of our favorite trades. Strong resistance here at 26. Yeah, there's that strong resistance, 26. He's got the Kata 2, second position. Stayed a little long on that one in my view. Got the second piece here. And now on this sell-off, we got a nice fence sitter between 21 and 22.50. So I'm ready to play this short in either direction and adding a second position long at 22.50 or at 21 and a quarter on the short side, believing that it should, if it breaks, it should get down to 20. So this is going to be a nice zero state breakout out of that range. I like it. Treasuries, you can see the that trading range from 120 to 110 that we've been talking about. And when this rolled over and broke the PSAR flip, there's your trade. Here's the support. Looks like around 109, 110 in this area. So we would not be surprised to see this recover because it already has. But would also not be surprised to see that fail further. Although there was some evidence of buying on Friday. If it can get above 110, 113 is certainly in play, and that's a 3% move on about a 50-cent risk. The alternative to stocks, I like it. PLMR. This is a fireworks, because you can see here's our let's see, here's a 30-day look back, 10-day, and a 5-day. It's up at the top of all of those. This little pullback was practically nothing, just getting braced for the weekend. So a breakout to the upside is free and clear until 95. And and a break to the downside should get it to 76 pretty easily. So that's at a really critical state. That's what a fireworks looks like. Pause, second leg up. If it doesn't continue, there's going to be profit protection in there, and that'll gather momentum to the downside with a target around 76. So I like that one. CTLT, healthcare sector, drug manufacturing. This was quite a sell-off here. Wow. Holding support nicely at 87 where it should. So that is about that's about as Godzilla as you want. Enormous 5-day percentage. Dramatically oversold on 10 and 30, and ready to resume or to continue the collapse. So that should be on your short list there, Ken H. I like it. Etsy. Nice base of support here. Here was a COTA 2. Nice gain. Pullback. Consolidation. If this breaks out, that's another COTA 2, and it should get to 120. If it breaks above 120 with a second position, then you're thinking it gets to about 140. The downside, it's easy to see how it gets to 90, and then it would face some support in here. If that breaks, then it gets to 70. So I like this breakout in either direction. I like this one especially here because you'll get a running start at this. So if 102 breaks, that is a gap. There is no support in here, whatever. The bottom will fall out of it, and it should get to 94, 95 pretty fast. That looks good. Last but not least, Verizon. The weekly price is completely collapsed with a big gap, consolidation, and sell-off that closed poorly. Still in free fall, still in the winter. If this starts failing, you got to pile on without regret. Ken H already has a position on it. I love that short, and if this starts recovering, I think I would just treat 42 as my risk and be willing to follow it on the way down. All right, that's everything we got for today. We'll get this published and processed, and we shall see you tomorrow.